All right, welcome back. Time to check in with Nick Day, who's also the editor of CoinDesk, the State of Crypto newsletter. So, Nick, we've been watching this Tether news. Bloomberg out with this report. What do you make of it?
Hey, good morning. Yeah, it's interesting. I think a lot of it was stuff we've already known or that has been reported piecemeal over the years. I think, really interesting parts to me were, they had a statement from John Betts, who used to be at, I think it was Noble Bank, which banked Tether. Tether's put out a statement saying that they fired him or that he was fired. So, that's something to be aware of. But just the fact that, John Betts is in there saying that he doesn't see it as a stable coin, he sees it as, some kind of, security type product, I think is interesting because he is one of the few individuals who, would be in a position to know about the structure and what's backing Tether. And the other side of it is also the fact that Tether is lending out its reserves. I think we also kind of suspected some of that because, Tether obviously made headlines a little over 2 years ago for lending its reserves to Bitfinex, but Bitfinex is a related entity, have shared corporate parentage, shared executives. What Bloomberg's reporting is that Tether's lending out its reserves to external companies. So Celsius was one example. And I'm not sure if that was known before. I certainly did not. I don't think I was aware of that. And, if Tether's lending out the reserves that are actually backing the coin, then, technically it doesn't have control over that, at that, whatever moment in time that those loans are being made. So that is something I think we're going to want a little bit more information on.
Yeah, Nick, that particular point was made almost at the bottom of the article, just sort of in passing, like, oh, by the way, they have all these assets, these loans from China on their books, and oh yeah, they lend some out to Celsius. What's interesting to note is that happens, or that's coming out at a time when all of these crypto lenders are under intense scrutiny from definitely from state regulators and potentially from the SEC. So does this make things even harder for Tether specifically, or for the stablecoin industry in general? This idea that they're actively lending the coins that they make, the stable coins that they make, that they're actively lending it out to these crypto lenders that are under such scrutiny.
Yeah, I mean, I think it comes down to, if I had to speculate, where exactly are the funds or how are they being used at whatever, a specific moment in time. So if Tether is lending out its reserves to a stablecoin company and, that stablecoin company is suddenly hit by a cease and desist, which so far, state regulators are leaning towards but haven't executed yet. But if those cease and desists take effect and, could happen in the next couple of months, then what happens to those funds? These lenders are not going to be able to continue generating whatever revenue they would have been generating at the same level. So will they be able to, pay back Tether? Will they not be able to? So I think the questions here is also, what has Celsius done with those funds? Is it using them? Are they holding on to them? And that's going to answer the question about, what risk there might be for Tether itself.
Yeah, we need to get Alex Mashinsky on the line. All right, well, we'll continue to monitor Tether as well as stablecoins news as it continues to develop. Thank you very much, Nick, for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.